Banker to banks. All banks maintain account with RBI to facilitate transfer of funds and settle interbank transactions such as borrowing from and lending to other banks and customer transactions. As the banker to banks, the Reserve Bank fulfills this role as the banker to banks. RBI focuses on enabling smooth, swift, and seamless clearing and settlement of interbank obligations, providing an efficient means of funds transfer for banks, enabling banks to maintain their accounts with it for purpose of statutory reserve requirements, acting as lender of the last resort. Lender of the last resort. The Reserve Bank provides liquidity to banks which are unable to raise short-term liquid resources from the interbank market. Like other central banks, the Reserve Bank considers this as a critical function because it protects the interest of depositors, which in turn has a stabilizing impact on the financial system and on the economy as a whole. A regulator of the banking system. Banks are fundamental to the nation's financial system. The central bank has a critical role to play in ensuring the safety and soundness of the banking system and in maintaining financial stability and public confidence in the system. As the regulator and supervisor of the banking system, the Reserve Bank protects the interests of depositors, ensures a framework for ordinarily development and conduct of banking operations conducive to customer interests, and maintains overall financial stability through preventive and corrective measures. Different departments of the RBI oversee the various entities that comprise India's financial infrastructure. RBI oversees commercial banks and all India development financial institutions, urban cooperative banks, regional rural banks, district central cooperative banks, and state cooperative banks, non-banking financial companies. The RBI's regulatory role. As the nation's banking regulator, the Reserve Bank performs various functions such as licensing, prescribing capital requirements, monitoring governance, setting prudential regulations to ensure solvency and liquidity of the banks, prescribing lending to certain priority sectors of the economy, regulating interest rates in specific areas, setting appropriate regulatory norms related to income recognition, asset classification, provisioning, investment valuation, exposure limits, etc. To achieve this objective, the Reserve Bank makes use of several supervisory tools. They are on-site inspections, off-site surveillance, making use of required reporting by the regulated entities, and thematic inspections, scrutiny, and periodic meetings. The Board for Financial Supervision oversees the Reserve Bank's regulatory and supervisory responsibilities. Corporate governance. The Reserve Bank's policy objective is to ensure high quality corporate governance in banks. It has issued guidelines stipulating fit and proper criteria for directors of banks. In terms of guidelines, a majority of the directors of banks are required to have special knowledge or practical experience in various relevant areas. The Reserve Bank also has power to appoint additional directors on the board of a banking company.